So in this chapter we'll discuss about provision. So we discussed earlier that NPAs, banks have to create provision. Okay, this will reduce the bank's profit. So we discussed various categories of assets: standard assets, substandard assets, doubtful assets, and loss assets. For each category of assets there is this provisioning requirement. First of all, standard assets. Standard assets are those loans which are not defaulted and the repayment is going on fine. So they are also not showing any signs of problem. So these are good accounts. But even for them, banks are supposed to make some provision. The rates will vary from sector to sector. Usually it's like a small percent. For agriculture and MSME, it will be like 0.25%. For housing loans, it will be 2%. So there will be some nominal provision to be maintained. Then there are substandard assets. We discussed what are these. These are loans that are non-performing for 12 months or less. And once a loan is classified as substandard, banks will need to create a provision of 25% on the outstanding amount. 15% is made for the total outstanding and additional 10% for the portion for which there is no guarantee. Then there are doubtful assets so these are remaining substandard for a period of more than 12 months. And here the underlying security is liquidated. The probability, even if the security which the bank might be having, even if they sell it off, the probability of recovering the loan is doubtful. For such assets, 100% provision is to be made for that portion for which the loan is secured. Right, and 25% is the required provision if the asset is remaining non-performing for up to 1 year for the secured portion, and 40% for between 1 year, 3 years, 100% for more than 3 years. That's not very important for you, but the number you have to remember is 100% for the unsecured portion. The market value is 60 lakhs. 100 minus 60 is 40 lakhs. So 60 lakhs is the secured portion because security is available. 40 lakhs is the unsecured portion. So for the 60 lakhs portion, it's enough if a bank provides 25% security if it is non-performing for 1 year, or 40% if it is non-performing from between 1 to 3 years, and 100% if it is more than 3 years. For the remaining unsecured portion, that is 40 crores, for that 40 lakhs, for that portion, it has to be 100%. So that is how it's classified, doubtful assets. In case of loss assets, okay, these are assets which are identified by auditors or even by the bank internally that there is negligible chance of recovery. So here what the provision should be like, it should be either they should be written off from the books of the lender, or a provision of 100% should be made. Usually they'll be written off because there is really no scope of recovering the loan. So the best option is to write off from the books of the account, or 100% provisioning should be made. So the questions may be prepared in this chapter. What are standard assets? What is the provisioning to be made? We discussed that. What are substandard assets? What is the provisioning to be made in those cases? What are doubtful assets? What is the provision to be made? And what are loss assets? What is the provision to be made?